Okay, it looks like we got 11 folks in. Renee, just let me know when you want me to start and when you're going to start recording, and I can get through the housekeeping items before we get started. So. Okay, appreciate it. And Renee, you're still on. If you could mute, that'd be great because I hear you typing. So we'll get started. So I just want to say welcome to everyone who's joining us virtually here today to our latest installment of SKO. Just have a few general housekeeping items to start. The first is, just want to let everyone know we are recording this session today, and the video will be posted on our SKO YouTube channel. Just be mindful of that today. So if you have any questions, we will have a little bit of Q&A towards the end. So if you don't feel comfortable asking the questions as we record, we can do that towards the end. So just be mindful of that. Second thing is after this webinar today, you will receive an email from Renee Lamb here in our office with both the Indiana and Kentucky activity numbers, and it'll have a very detailed way to claim your CLE credit. And as well in that email, you're going to have a Survey Monkey. Please complete that Survey Monkey. That really helps us out on good feedback and understanding what things people like, what people dislike, future topics. Ideas that you all are interested in so we can keep everything fresh and up to date for you all. And so, yeah, with that said, we'll just get started today. I appreciate, again, coming in virtually today and meeting with me. Just a little bit of background on myself. I'm here in the Evansville office. I primarily practice in commercial real estate, mergers, acquisitions, primarily a lot of title insurance, title work, but I also do some nonprofit governance, which we'll talk about today. I do serve on multiple nonprofit boards, which I'll kind of allude to as we talked more today. So I am licensed in Indiana and Kentucky, so right here on the river, and grew up in Western Kentucky. And so with that, we'll jump into the presentation. Today's presentation was really based on one of those surveys from the Survey Monkeys, and so this was a topic Chris Schaefer in our office said, hey, folks are really wanting to hear about nonprofit governance. And so when you say nonprofit governance, that can mean a whole lot of things, right? And so I tried to kind of keep it high level, really not want to get into too much of the weeds because you really can, especially when we start talking about some of the tax-exempt stuff, IRS determination letters, the 990s, as well as some of the state requirements as well. So today we're really just going to talk about initial, what is nonprofits, the code, creating, informing your nonprofit, getting the tax-exempt status confirmed with your IRS determination letter. We're also going to talk about fiduciary duties, as well as conflicts of interest. I'm assuming most people on the call today, we're all attorneys, so once they perform another, we either have nonprofit clients or we serve on boards of nonprofits because you, as everyone knows, that every nonprofit always wants to have the attorney on their board to advise them of legal issues. And so we'll really dive into that kind of later in the presentation. So if at any time you have any questions, feel free to type it in the chat box. I can jump in and answer any questions you have. But if not, we'll get started more in detail. So what are nonprofit organizations? Well, that's kind of a huge, big question. There's more than 30 types of nonprofit organizations recognized by IRS under 501c. Primarily, we're going to talk about 501c3s today, but just want to make you aware there's all kinds of nonprofit entities. Social, and here's just kind of a sample of them. There's more than 30, but here's kind of a sample I kind of put here on this slide. Social welfare organizations, 501c4. The most common one I think of when I think of a 501c4 is at homeowners association, taxes and status, and filing for HOA creation. That's where you're going to be there. The trade associations, 501c6. The example I'm thinking of there is here in Evansville, we have our local bar association. The Evansville Bar Association, we are seen as a trade association, tax-exempt entity, nonprofit, but we are not a 501c3. We are a 501c6. The next example I have is a social club, 501c7. Probably the best example of that is a country club, a private country club that's seen as a social club. You know, here in Evansville, we used to have the Kennel Club, private dinner club such as that. That's where you're going to fall into that 501c7. The last is veterans organizations, and in all honesty, I really didn't know about this organization, and it was kind of a learning experience to figure out what a veterans organization is. And so I looked up the requirements. You have to qualify for recognition as a 501c19. You must be composed of at least 75% of past or present members of the armed forces in the United States and veterans, and substantially all the other the members must be cadets or spouses, widows, or widowers of veterans. So again, whole list of what is a nonprofit organization. Again, primarily we're going to talk primarily about 501c3 and even another subsect of that 501c3, but just so you know, when somebody says nonprofit, that can mean a whole multitude of things. So we'll kind of talk about 501c3. So again, most common 501c organization is a 501c3. They're classified as charities under the Internal Revenue Code. What's the big catch, right? I mean, I think everyone kind of knows this, is that you're exempt. 501c3s are exempt from federal income tax purposes as other statutory benefits as in tax deductible contributions by your donors. And so today's presentation and CLE will primarily be talking about 501c3 organizations. Here are those additional statutory benefits we talked about on the last slide. Ability to receive tax-deductible charitable donations. We could talk a full hour about that, especially with some of the tax and the increased standard deduction and itemized deductions, whether or not that's even helpful for most taxpayers now who don't itemize their deductions. Reduced postal rates, that's something that really is a huge benefit for a lot of nonprofits, at least for the nonprofits I sit on. I'll just go ahead. I sit on the Children's Museum of Evansville here in Evansville, and I don't know what when I got married, I guess I didn't realize how quickly postage could add up when we're sending out our invitations and we're sending out our save the dates. Postage can really add up, and not having to pay for that postage as a nonprofit is a huge, huge benefit. Something that I think is underrated and underappreciated a lot. And so as much as we could talk about our postal service and its issues that it has, I do appreciate that that is a statutory benefit nonprofits receive. Exemption from Federal Unemployment Tax Act, tax-exempt financing, especially for grants, for other support like that. And then as well as, again, we won't really get into this much today, but there's also various state-level income, sales, and property taxes. I know in Kentucky recently, back in 2019, sales taxes were exempt, and that's a very state-by-state level. And I'll make a good point of that today. A lot of the tax issues we're going to talk about today is federal tax. There is a whole subset of state-level tax issues for nonprofits that you need to be aware of. But primarily we'll be talking about today with the Form 1023 and getting your IRS determination letter. That's all federal, but there are some state-level tax issues you have to be aware of as well. I'm trying to think of anything else in my notes on this I wanted to discuss. I think there's also a big component of some of these benefits for free advertising that you can get depending on the organization. I know with our Children's Museum, being a nonprofit really helps us out with advertisements and getting the word out to our potential donors and public service announcements. So again, those are just some other non-statutory benefits that can be on a case-by-case basis. Okay, so let's really dive into how you become a 501c3, what are the parameters. So a 501c3, you must be organized and operated exclusively for at least one of the following tax-exempt purposes: religious, charitable, scientific, testing for public safety, literary, or educational purposes, to foster national, international amateur sports competition, or for the prevention of cruelty to animals. Again, I think most folks on either the boards you serve, for most 501c3 organizations you deal with, are primarily going to be in that first bullet point about religious, charitable, scientific, literary, educational purposes. The second one, to foster national and international amateur sports competition. I'm thinking a good example of that would be, the local, my son's about to sign up for T-ball at East Baseball here in Evansville. I haven't really pulled the records of East Baseball here in Evansville, but I'm assuming they are 501c3 because they qualify for that second bullet point as amateur sports and everything. So the other example I would see in that second bullet point is booster clubs. I'm sure a lot of folks on the phone call today have kids who are in athletics in their local school, and there is a booster club, correct? And so in order to be a booster club, you want to be a nonprofit, so that's where you would fit likely within that second bullet point. Again, I think the third bullet point, it kind of explains itself about cruelty to animals and how you could qualify for that. Religious, charitable, scientific, and educational purpose. That's a pretty broad area, right? I think when we think about how to qualify, how to get the 501c3 and be tax exempt. Religious organizations, I know my colleague John Henderson, my former colleague I should say, is on the call today, and we had a phone call the other day talking about religious organizations and some of the things they are not required to file in terms of 990s and everything like that. So I really don't want to jump into the religious organization. So a lot of times we're going to be talking about charitable and educational purposes on today's call. So and then so once you hit that first, you have a purpose. The second kind of prong is that the organization's efforts must also benefit the public rather than private interests. And so that's really big in that, it's supposed to be for a public benefit and not for a private benefit. I think that's, what really separates 501c3 from some of those others. And so we'll kind of go to the next thing. And so the biggest no in a 501c3 is to ability to carry intended influence legislation, i.e. lobbying, right? You cannot use a 501c3 to influence legislation, and that's a big part, and we'll kind of talk about the Form 1023 later on in this presentation, but that's a specific question they ask, and that's a specific provision, and we'll talk a little bit about your articles of incorporation or your formation documents, but that needs to be a specific provision in your charter documents or your formation documents, that no part of this organization will be, or funds of this organization will be used to influence legislation, nor will our activities, rise to that level. Huge, absolute statutory prohibition against attempting to participate or intervene in political campaign or any candidate for public office. These are supposed to be for the public benefit, for public uses, and not to influence legislation. So, again, we could give a whole nother CLE on PACs and political campaign committees and the finances that are the issues with that. But just be aware that when we're filing your documents, you're filling out your Form 1023, you want to make sure that you paper all your organizational documents so that you don't want there to be any type of inference that you are influencing legislation or participating in lobbying activities. Private foundations, I think I just saw a comment, something about Mar-a-Lago tax exempt. I'll look at it here in a sec, but private foundations, these are going to fight. I know we have some folks on the call today who maybe work for a company that have their own private foundation, or maybe they're involved in a private foundation, maybe through a family connection for one way or another. I don't want to get too much into the weeds on a private foundation versus a charity versus different organizations, but just the default classification for a private foundation is a 501c3. They are more heavily regulated by IRS, subject to lower limits on deductions, more likely to lack oversight from the general public, or are historically prone to abuse before the adoption of these restrictions. So, again, don't want to get too much, but I know when I was talking to my colleague here in my office, Ted Zemer, about, hey, what are some issues that you think our clients or other in-house counsel are dealing with? And private foundations is something that he brought up. Again, I have never been too heavily involved in a private foundation. My area has mainly been with the Children's Museum and the local Evansville Bar Association, but just be known that the default classification is for 501c3 for a private foundation. And so just be mindful of that. So, okay. How do we form a 501c3? What does it look like? Every type of nonprofit that I've been a part of has been a corporation, a nonprofit corporation. I do know there are some ways to create LLCs for nonprofit, but for the vast majority, for the most part, they're going to be a non-for-profit stock corporation, nonprofit corporation. I'll pause here, and we're going to switch our hat from the federal tax issues over to state formation requirements. So let's put aside the federal 1023 IRS determination letter. We're going to take off that hat, put on the hat of the state incorporation, and look at the specific state requirements, whether that's what type of entity. Each entity or each state has a different way how they classify mutual benefit corporation, non-stock corporations, nonprofit. So each state varies on how they define what a nonprofit is, or what exactly you need to classify when you're organizing or forming it. So, and so essentially there's kind of two types of main nonprofit corporations. You have ones where you have members of the nonprofit corporation. So I'll take, for example, the Children's Museum here in Evansville. I mean, we are a nonprofit, but we do have members. Members are buy in a yearly pass. They are considered members of the museum, and so that is who we see that we serve. We serve our members of the organization. The other is if you don't have members, you just serve the general public at large. So there's kind of two types of organizations you can be: the ones that will have members as part of the nonprofit versus a one that does not have members of the nonprofit. And so that's kind of the main difference. It really looks at the specific state that you're in, whether you're Kentucky, Indiana, or Illinois, or wherever you're at, just to make sure you're reading the nonprofit statute accordingly and you're forming it the right way. So we'll talk about, again, this is a very, members given rights and governing documents. Some states require that non-stock corporations have members. Again, totally different by each state. The main thing about forming a nonprofit in whatever state you're in is making sure that you have this specific language in there required to meet the organizational test under 501c3. So going back to that purpose, in your articles of organization, you should ensure that you have these following provisions. And these are kind of the main things. So the organization exempt purpose or purposes such as charitable, religious, educational, scientific. So you need to be very specific about the purpose, the mission statement of your nonprofit organization that are within the actual articles of incorporation. And so, you can be pretty broad depending on what your purpose is, or you can be very narrow. I know we have some clients, they've had to pivot because of COVID and COVID regulations or whatnot, and some nonprofits are kind of having to go back in and look at their organizational documents and make sure that, hey, are we still operating within the parameters of our purpose? If not, do we need to amend our articles? Do we need to amend anything within our organizational documents so that we are still staying consistent with our purpose? And so I definitely think, I know, some nonprofits are really old that we serve on. And so I think it's important that any time passes and we're doing new things, we're having to pivot for things like COVID, we're having to pivot to do different type of virtual learning or some type of other mission or purpose, we always need to go back to our documents, our organizational charter documents, and say, are we still being consistent with our initial tax-exempt charitable purpose? If not, do we need to amend it to kind of pull those things in that we're doing? The second thing, and this is really important, and I have dealt with this a fair amount of times because of the dissolving of an organization. It's always pertinent that in your organizational document that upon dissolution of the organization, the remaining assets of the corporation will be used exclusively for the exempt purposes. There's kind of default state law you can rely upon. If you don't put this provision within the actual articles itself, you're kind of, in most states, there is a specific statute that spells this out. Essentially, at the end of the day, it means, hey, if we get to a point and we need we need to dissolve the nonprofit for whatever reason, our purpose has ended, we're just no longer a viable entity, we can't use those. We can't liquidate our assets, sell our assets, liquidate everything, and then distribute that out to our board of directors for all the time they have spent and volunteer hours they've given to serve on the board, or paying the executive director like a one-time bonus saying, hey, thanks for everything. You need to take those assets and cash and then distribute them to another exempt entity. Typically, it's going to be another entity very similar to the dissolving entity with the same purpose. I've seen some boards get very creative with this. I've seen, some nonprofit organizations have a very detailed list. They really vet these other nonprofit, tax-exempt organizations to make sure that the funds that are being used are being used for a similar purpose, a similar tax-exempt purpose. And we'll talk about the 1023 here in a sec, but they specifically ask in your 1023 application, which is your determination for tax-exempt status, if this is within your articles. So again, it's very important. I know NBIS, which is the online filing for the state of Indiana, they actually ask you this specific question. Like you can't just skip it. And so it forces you to put in this provision that, hey, you acknowledge you're going to, upon dissolution of the nonprofit, the organization, you will distribute assets to like tax-exempt entities. Okay. All right. Form 1023 is the application for recognition of tax exemption under 501c3. And so the determination letter of tax exemption. So you get form, you apply for the EIN, so I probably kind of skipped that over. You need to apply for EIN already, but before you start hitting the dusty trail and soliciting for donors and raising money, you need to get your determination letter from the IRS. That determination letter is kind of like the golden ticket when you go and want to get those statutory benefits we were talking about earlier in the presentation. Your donors are going to want to see that to make sure that their contributions are tax deductible. If you're asking for that, the mailing, postages, they're going to ask for that. Anytime you're dealing with a third party or somebody out there and you need those benefits, they're going to ask to see a copy of your determination letter of exempt status. And so Form 1023 is that application. I'll just mention this here. it is all online now. I do not think you can even apply for this through a paper copy anymore, and I have kind of a paper copy here that I printed off before this presentation. But everything is online now with this application. There's also a 1023-EZ, so if there's certain eligible organizations, if you meet a certain threshold, there's kind of a shorter form version of it. In a nutshell, it is a very detailed application that asks us about structure, activities, who all is involved, compensation to officers, directors, trustees. I'm looking at the paper copy right now. I think it's about 25 pages long. So it is a very, very intensive application, and for good reason, right? I mean, because we really haven't talked about the abuses of nonprofit organizations, 501c3s. Obviously, when there are statutory benefits like this available, there's always going to be folks out there who are looking to take advantage of it for nefarious reasons, right? And so for good reason, we need to be asking these questions on a Form 1023 to make sure that, John here just said online application is similar to the printed application. So thanks, John, I appreciate it. And so it's very important that we go through this exercise because there is a risk of abuse of these regulations out there. And we'll talk about that in a second, maybe some more with the Form 990s and revocation of your tax-exempt status, but that's why it's such a high burden and a high hurdle, why it's, 25 pages long, and they're asking for a lot of questions about who's involved, why, the purpose, where is the money being, who's in charge of these funds, because it's important for, all taxpayers that no one runs afoul of these regulations and takes advantage of it. So, let's see here. Okay, so let me talk about let me talk a little bit more about the 1020 and kind of the timeline. You need to do this, I think, within the first 27 months. So don't form a nonprofit and let it sit on the shelf and then, we need to go and do the IRS determination and file the Form 1023. You need to do this pretty quickly. Stay on top of it. I know now you can actually request a copy of your IRS determination letter if you lose it. What happens if you don't get it? There is actually a way to appeal. So let's say you've got a nonprofit corporation or organization that's starting up. You file the Form 1023, and for whatever reason, you are denied a determination letter and getting the tax-exempt status. You have technically, it's a quick turnaround. It's 30 days to appeal into the appeals office of the IRS your determination. So it's a pretty quick timeline. So again, don't really, if for some reason, for whatever reason, your 1023 application is denied, you need to move pretty quickly on doing an appeal if you feel like you want to appeal it. And so that's just something I have in my notes here when I was getting ready for this presentation. There is an ability to appeal it. So, okay. So we've got our, we've set up, we filed our articles or whatever organizational documents with the Secretary of State. We've gotten our EIN, we've gotten our determination letter from the IRS. We've filed, we've got the 1023, it's all been approved, we're ready to go. Now we're ready to start raising money and now, really wanting to do our purpose, right? The purpose of our organization. That was fun, but great, let's start doing it. Don't lose sight of you need to retain that tax-exempt status. And so in order to do that, most organizations file a 990. So depending on the type of organization you are, a 501c3, there's different types. For example, private foundations do a 990F. But a 990, essentially, it's a return. It just says, hey, what all have you done this year? Are you still staying consistent with your purpose? Are you making sure that you're if you're not retaining any profits, that you're using those profits either for reserves or you're reinvesting those back into your organization. You're not giving inflated salaries or bonuses to your officers and board members of alike. You just making sure that everything looks good on paper. And so, again, important that you stay on top of this. I know, again, we were talking about religious organizations earlier. They don't have to follow the 990. So, again, we don't want to talk about why they don't need to, but the main thing is make sure you're doing this. If you are required to follow 990, I believe it's 3 years. If you don't file a 990 for 3 consecutive years, you're automatically revoked of your tax-exempt status. And so it's very, very important that you stay on top of this. Most organizations who are large enough who can have support of an outside accounting firm will get, an accounting firm to help with this Form 990. And just be mindful that these 990s are public record. I think most people on here know that you can essentially Google any Form 990 on any nonprofit organization out there to see what their finances look like, which is always interesting, right? You could spend all day on Google and searching every different 990 on every different nonprofit to see what their finances look like. And so that's kind of what I'll talk about on the first point. But the second point I want to bring up is I don't think I've ever seen this in an organization I've been a part of or served on or represented, but if at any point in time you have unrelated business income that's unrelated to your nonprofit purpose, you have to report that, and you have to file that with a 990T for unrelated income. Again, I don't think I've ever been a part of an organization where this has been the case. I'm sure some folks on here have, who are attending today, have been a part of this. Again, just be mindful that in extreme cases, if your unrelated business income is really not consistent with your other, tax-exempt income, that you could be taking your tax-exempt status at risk, whether that means, hey, maybe we need to spin that off into a separate entity that's where it's not under the same 501c3 IRS determination, whatever it is. But just be mindful that if your unrelated business income or unrelated income starts creeping up on your other income, then maybe you should look at it, be time to, hey, let's restructure this, let's spin it off into some separate entity that's on itself. That way we're not putting our tax-exempt status at risk. Let me make sure in my notes I'm not missing anything on this slide that I wanted to bring up. But again, I think going back to what I was saying earlier about your purpose and organization, you always need to go back and it's always a great exercise. I mean, I've been serving on the Children's Museum Board now for, this is coming on 7 years, and so when we were first getting started, our purpose was, educational and creating opportunities for children in the community and making sure that we're always staying with our purpose. When we have new ideas or new fundraising opportunities come on, that we're always remembering, okay, is this still consistent with our purpose so that we don't put our tax-exempt status at jeopardy? And so, again, I think I just have one slide on this. Again, really don't want to get into all the nuances of state and local requirements, but just be mindful that we were talking about just federal tax-exempt status and everything. There's also a whole section of state and local requirements. And so, the Attorney General is really the arm who overwatches all the nonprofits in the state. So again, you just want to make sure whatever state you're in or incorporated or doing business that you are staying on top of all the Attorney General's regulations, the Secretary of State's regulations, and filing whatever registration you need to do business. So again, most of the nonprofits I serve on don't really have to have registrations to do transact business in other various states or jurisdictions, but just be mindful of that. State and local governments. So again, be mindful that there are state and local tax exemptions for real property taxes. Again, I was talking earlier about the sales and use taxes in Kentucky. there's a whole litany of other issues that you can, apart from the federal, that you just need to be aware of. I mean, we could probably spend a whole presentation on state and local requirements for nonprofits, depending on jurisdictions and municipalities or wherever you're in. Okay, so kind of want to turn our attention to from, just corporate, formation and tax-exempt status and retaining that tax-exempt status to, okay, let's talk about serving on, because again, I assume most people on this webinar today are in some way, shape, or form involved with a nonprofit, serve on a nonprofit board, represent nonprofit clients. So I always think it's a good thing to talk about conflict of interest, some fiduciary duties. I know this isn't an ethics CLE, but again, I'd be remiss if we didn't talk about it. So what is a conflict of interest, just in a nutshell? So a conflict of interest arises when a person in a position of authority over an organization, such as a director, officer, manager, or key employee, can benefit financially from a decision he or she can make in such capacity. So, long story short, if something doesn't look right, smell right, probably isn't right, that's kind of, whatever decision you're making or whatever things presented in front of you as a board member, if you have a vested interest in that in some way, and we'll get into some examples itself, that's likely a conflict of interest. And we'll even say, hey, a conflict of interest could even be advantageous to the corporation. And we have an example of that here in a sec, but conflict of interest are huge, huge, huge. We'll talk about conflict of interest policies later on, but that is another thing the IRS looks at to make sure that you have a conflict of interest policy in place. And so these benefits could be indirect benefits, so maybe a family member, a business, something else you're closely associated with. So let's just do a simple example of a conflict of interest in a nonprofit setting. So Ellen works part-time as a manager for a nonprofit consignment shop and works full-time staging homes for realtors. So I know staging now is a huge, huge thing for realtors. And so Ellen here, she works part-time for a nonprofit. I know Salvation Army or Goodwill, one of those type of consignment shops is what I'm kind of talking about there. So if Ellen was to buy furniture from the nonprofit consignment shop at a discount, again, a huge discount because she works there and maybe she sees a couch and says, hey, that would look good in a staging, and maybe we could get $50 out of it all and give you like $5 for it, and then she goes and uses that to staging for a business, that would be a clear conflict of interest. So this is a very simple example, but again, they can be a lot more complicated, a lot more layered than this. So we can also talk about, I know we talked about financial benefits, but there can also be non-financial benefits for potential perceived benefits, divided loyalties, jeopardize, nonprofit, bad publicity for it. So again, it doesn't have to be a financial benefit. It can be a non-financial benefit, and we'll talk about here in a sec. But conflict of interest are big, and they're big for donors. I think a lot of people forget that donors pay attention to these type of issues, and the public pays attention to these type of issues. I mean, every now and then you'll see it in the paper about a nonprofit has a contract with another company, and there's some not shady stuff, but there's some relationships with some board members, and it's like, is this really an arm's length transaction? Even though it might be an arm's length transaction, just the perception of it looks bad. And so, on the last point, this is the next example we'll talk about. A conflict of interest may arise even if the nonprofit benefits from the transaction, and even if the interested person has the best intentions for the company, and it's in the best interest. So even if it's a good deal for the nonprofit, and it could still be seen as a conflict of interest. So here's an example of that. So Paul works for ABC Company as a salesperson. ABC Company is a for-profit, and Paul serves on the board of directors for XYZ nonprofit. So ABC Company offers products. I know I was in law school, widgets. I never knew what a widget was in law school. Widgets to XYZ at a cost or at a discount. So here we're not just marking up the cost to create more, but we're actually going to cut the cost at a discount. So there still might be a conflict of interest that needs to be probably disclosed by Paul and handled by the nonprofit's board of directors pursuant to their conflict of interest policy. regardless if it was going to be a huge benefit to them. And so again, if there's any type of relationship between you and I've seen this issue too, two nonprofit boards. So if I serve on one nonprofit board and there's another nonprofit board I sit on, and maybe we're going after the same grant, and I have some information from another nonprofit that could be used that gets that, there's a huge host of issues that could arise. So again, we talked about why conflicts of interest are important. Just preventing an appearance of non-conflict is huge. So again, you don't want to put your tax-exempt status at jeopardy by not having a conflict of interest policy and not handling conflicts of interest appropriately. Again, it goes back to inuring to the benefit of private individuals. That was, if you remember, that was one of the prongs of the 501c3 of how you qualify. You don't want income to benefit private individuals, and so that's why conflict of interests are important. We're coming up, so I kind of want to get through some other slides here. Again, these are just issues that can lead to conflict, misuse of charitable assets, damage to the nonprofit's reputation in the community, because reputation is everything, right, with nonprofits, and creating a buzz, creating a good light in the community. And so director liability for breach of the duties of loyalty and care. Again, don't want to get too much into the weeds on fiduciary duties that you have as board members, but board members have a fiduciary duty to the organization, duty to care, duty to loyalty. And I kind of digress here a little bit, but I think nonprofit directors the last 2 years with COVID have been under a huge strain on our decision making, because nonprofits are great. A lot of times staff members are underpaid just because the funds just aren't there to support them. And so when we're having to make decisions on terminating employment or making cuts, pulling the levers, so to speak, on certain things based on our cash flow and run rate and all that, we always have to remember that the organization is who we have the fiduciary duty to. So it's the organization's best interest. I might have a good relationship with the executive director or the employees or whoever, the development director, but our focus is on the long-term sustainability of the nonprofit organization and that it's around for the next generation. I always think the children's museum that my own grandkids will go there. And so those are just some of the fiduciary duties. Again, we could spend another 30 minutes to an hour talking about fiduciary duties on the board of directors, but it's been really hard. I'm just going to say that because it's been hard the last 2 years serving on boards, and the decisions we've had to make on cuts and on programming, but yet still trying to serve the public and stay consistent with our mission statements, has been really tough. Okay, conflict of interest policy. Every nonprofit should adopt. I mean, I didn't even say should, but they pretty much have to at this point, based on your 1023, because I think they do ask you, do you not have a conflict of interest policy to help ensure good judgment and performing a person's ability in nonprofit's best interest, kind of what we're talking about on fiduciary duties. Complying with state and federal law governing conflict of interest, avoiding negative conflicts consequences of a conflict of interest, and watchdog, rating agency, donor expectations as well. So, what does like a good conflict of interest policy look like? I mean, you can Google or look up all kinds of conflict of interest. I mean, the whole internet's full of different ones. But there's just a few major themes that you kind of need to have: duty to disclose, annually complete the confidential statement disclosure form, disclose at any time a potential conflict of interest, disclose to the board of directors before the nonprofit areas, and propose transaction arrangement. So, for example, every year the Children's Museum here, when we're on a July to June fiscal year. So when we meet for our first meeting in July, we all pass around the conflict of interest forms, and you complete the conflict of interest and the disclosure, and you say, hey, I agree to be bound by the conflict of interest. Here's some other organizations I'm a part of. Here's who my employer is. Here's who I work for. there's, like I said, other nonprofits or other organizations I serve on boards with, so that you're just complete disclosure about it, and there's complete transparency. Again, if it doesn't smell right, probably isn't right, always err on the area of disclosing a conflict of interest. Especially, and always do it before you enter into either the joint venture or the relationship, so that if needed, you can abstain from voting on that matter, or all the other members of the board of directors are aware of that before they vote on the matter. So, again, review the conflict of interest policy. Kind of going back to, you need always just, it's always a good exercise to pull your organizational documents, including your mission statement, your purpose, and your conflict of interest policies, to make sure, are they still being enforced? Are these outdated? Is it still meeting our needs? Is it reasonable? Is it again, I know conflicts of interest are big, and you don't want to hinder the organization from putting tying an arm behind its back. So is it still reasonable? Is it advisable that we can continue with the conflict of interest policy in place? Okay, we got about 10 minutes